ECRI, my best leading indicator, says we're already on the verge of a recession now, not 6 months from now. This is going to crash, and I think Bitcoin could go down to 3,000 to 7,000 and then go to 500,000 to 1 million in the next global boom. So that will be the buy of a lifetime, but I wouldn't touch it with a 10-foot pole, even down 50%, 60% here. Yeah, they say that bear market rallies are the strongest rallies because when something finally peaks, people don't believe it at first. So it goes down and then people buy the dips because they've been taught to do that the whole downturn. So the rallies are strong, but at some point these rallies are going to be disappointing. I think this will be it. We've gone down, we'll have a rally here, and if we go down to new lows in the next month or so, which I expect them to say July, people are going to finally say something's wrong. You know, something's wrong that we may have really seen a peak in stocks. And I'm saying January 4th and the S&P 500 was the peak, and major markets around the world have been peaking for a whole year from February 2021 to recently. So this, if a normal peak and correction, everything goes down. No, you don't see markets peak one after the next unless it's a long-term top. Something goes wrong and things are way overvalued. What people don't get, people think, the economy's strong. You know what? The economy's strong. The Federal Reserve's put like $5 trillion of money printing in the last few years and $5 trillion in the government in fiscal stimulus. It's all stimulus. The economy underlying from 2008 to now is weak. So the problem is that when things finally go down, it's going to be stronger than people think because the economy is so weak. Without this stimulus, we'd have nothing. They are committed now, after overstimulating for so long, since 2009, they are now forced into tightening when the economy is a lot weaker than they think. They think, the economy's okay. Well, they printed so much money, they've given people so much free money, it looks okay. As soon as this thing falls, it's going to be stronger than people expect. So I do not think the Fed is going to have 4 tightenings. I don't think they'll get that far before the economy goes
Is
down.
a recession inevitable?
Yes. I think the recession, my indicators, ECRI, my best leading indicator, says we're already on the verge of a recession now, not 6 months from now. We're about to go into recession already, and this is after $10 trillion, half of our GDP, of stimulus. How could you stimulate that much and go into a recession again? Why? The economy is the weakest it's ever been, as my indicator said 30 years ago. Fed is hoping for that. They don't understand the underlying trends of the economy. They just think if they do the right interest rates, no, there's no soft landing here. We are so overstretched. The biggest bubble in everything, real estate, financial assets, everything, even gold has been in a bubble, will be the safe haven. Gold will not be. And I'm in a conference where everybody thinks gold's going to be the safe haven. Not. It wasn't in 2008.
Why is gold not the place to seek refuge in the storm?
Because it's a financial asset. It's the king, I would say, of the commodity sector, and it will do very well in the future when we get past this, because India is the biggest driving factor after China. India will be the next China, and Indians love gold. I've never been in a country where people love gold more than anything. Gold is an asset that has bubbled like everything else. All financial, remember I said all financial assets have bubbled. All will crash. Only the treasury bonds, the safest bonds, go up in that scenario, as happened in 2008. Gold went down. Only thing went up in 2008 was treasury bonds.
So give me your gold price line over the next, 5 years.
Yeah, okay. I would say in the next year or two, down to 900 to 1,000. And I'm telling you, that's going to look good compared to other commodities and stocks. Stock's going to be down 86%. And then I think gold in the next global boom, which will be dominated increasingly by Southeast Asia and India, and they love gold. I think gold could go to 3,000 to 5,000 in that boom, but not in the bust. It's people think Bitcoin's a safe haven. Bitcoin's the biggest bubble here. New industry. They think gold's a safe haven. No, gold is not the safe haven.
So when is gold going to 5,000? When do we come out of this?
In the next global boom from 2024 to about 2037. And the next inflation commodity boom into 2038 to 2040. Gold will benefit from both of those trends.
So you see us coming out of this by 2024?
Yes.
Okay. So we just have to ride out this ugly storm.
The economy takes long, but the worst of the crash should be by the end of 2023 if it continues to go forward and the government's don't.
And you see gold at 5,000 by 2024 or beginning at
I think gold could be 3,000 to 5,000 in the next global boom between 2037 when the millennials peak in spending and 2038 to 40 when the next commodity bubble. Gold is really the king of the commodity bubble. So I think gold could be 3,000 to 5,000 by 2037 to 2040. Bitcoin, here's the best definition I heard at a conference from another speaker, and I've stolen this line ever since. It's the digitization. Cryptocurrencies are the digitization of all financial assets. Is that a big deal or not? So that's what it is.
Well, that's Bitcoin, DeFi at large, perhaps. Is that DeFi or is that
Yes.
Bitcoin?
No, it's DeFi, but Bitcoin, I see, when it grows and gets more acceptance, could be the standard. That everybody's talking to this conference about gold coming back means that no, gold will never be the standard. It cannot keep up with the global economy. We're in a digital economy now, and Bitcoin could become the new standard for the digital economy in the future, replacing gold in that function. So I think Bitcoin, and I've tracked this versus the dot-coms. I compare the cryptos to the dot-coms in the late 90s. It wasn't just a bubble in tech stocks, it was the dot-coms. Amazon, okay? Amazon was a nothing burger and became the greatest retail in history. So this is going to crash, and I think Bitcoin could go down to 3,000 to 7,000 and then go to 500,000 to 1 million in the next global boom. So that will be the buy of a lifetime, but I wouldn't touch it with a 10-foot pole, even down 50%, 60% here.
All right, I want to break that down a little bit. So Bitcoin goes down to around 3,000
3,000 to 7,000, yeah.
in the next 2 years.
In the global crash,
In the
where all financial assets, and Bitcoin is a new financial asset. It's like the dot-com.
But ultimately, you see Bitcoin going to $500,000
$500,000 to $1 million.
by 2037?
Yeah, and you know what? That would be enough for it to overtake gold as a global standard for money. I think Bitcoin becomes the global standard. It's not there yet. It's not big enough. It's not widely accepted, but I think it'll crash the most. I think Bitcoin, like I said, 4,000 to 7,000 from 69, that'll crash more than stocks. That's what I would, if we have this crash I'm predicting in the next 2 years, the number one thing I'd buy would be Bitcoin or Ethereum coming out of it.
Number one thing you'd buy, Bitcoin and
That's
Ethereum.
the next new wave, like the dot-coms, like Amazon were in the 2000, 2002 crash.
Okay.
You know, Amazon went from 136 in 2 years and back to $6. That would have been the buy of your lifetime back in 2002.
And one of the top questions, and you've kind of touched on this already, was your outlook on the US housing market, which you said is also going to be part of this crash. So elaborate on that.
Well, number one, it's the biggest part of the crash. Most people don't own that much in financial assets like stocks, in their 401k plan. They own some. Everybody owns real estate in the United States. Everybody that can afford to does. So when real estate goes down...
Millennials don't. That's been part of the problem. They can't afford a home.
Well, they're the winners here. The millennials are going to kiss the ground when this happens, what I'm saying, because real estate will go back down to 2008 to 2012 levels, the lows we saw after the last crash. And remember, stocks crash quick. Real estate took years to hit a bottom, really mostly 2010 to 12. Real estate will go down at least to those levels and become affordable to the millennials for the first time in their lives. They're the winners. Guess who the losers are? People like me, baby boomers who've invested in real estate and keep saying you can't go wrong buying real estate, own real estate, and real estate goes down. Now, last time, 34%. Even the Great Depression, 26%. This is the biggest decline. This will be 40 to 50% real estate. We've never seen that before. That'll be a shock.
And when all of those low targets are met, that's when you're saying it's safe to jump back into the water.
Only when things get back to reality, which they are nowhere near. So everybody thinks, well, the Fed keeps doing this. No, we're in a bubble that's already so extended. There's nothing the Fed can do except extend this a little longer. The only way to get back to normal is to have a crash. There's no other way to get there. If it doesn't happen by the end of 2023, then I'll shut up.